This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets slipped Monday as traders weighed the impact of Iran's drone attack on Israel over the weekend, with focus also on key economic data from China and Japan later in the week. Iran launched more than 300 drones and missiles against military targets in Israel on Saturday in an attack that President Joe Biden described as unprecedented. The U.S. intervened to directly help Israel shoot down nearly all of the incoming munitions, Biden said in a statement Saturday. Oil prices were little changed on Monday morning, with Brent crude futures trading 0.02% up at $90.47 per barrel and U.S. West Texas Intermediate futures 0.13% lower at $85.55. India will release its wholesale inflation figures for March later in the day, while China will announce its first quarter GDP numbers on Tuesday. Japan will release its March trade data and inflation numbers on Wednesday and Friday, respectively. Japan's Nikkei 225 fell 1.28% on open, while the broad-based Topix was down 0.97%. South Korea's Kospi fell 0.92%, while the small-cap Kosdaq dropped 1.58%. In Australia, the S&P/ASX 200 saw a smaller loss compared to other Asian markets, down 0.14%. Futures for Hong Kong's Hang Seng Index stood at 16,476. Pointing to a weaker open compared to the HSI's close of 16,721.69. U.S. stock futures ticked higher Sunday as investors assessed Iran's missile and drone strike on Israel, as well as a spike in equity market volatility that sent the Dow Jones Industrial Average to its worst week of the year last week. Futures tied to the Dow Jones Industrial Average rose 90 points, or 0.2%. S&P 500 futures added 0.2% and Nasdaq 100 futures advanced 0.3%. Gold futures pulled back slightly at $2,373 an ounce. Bullion hit a record level last week and is up 15% this year as investors seek safety from sticky inflation and geopolitical tensions. CNBC's Ha-Kyung Kim contributed to this report. Japan's core machinery orders beat expectations by a large margin in February, rising 7.7% month-on-month compared with the 0.8% rise expected by economists polled by Reuters. However, on a year-on-year basis, core machinery orders were down 1.8%, a smaller drop than the 6% decline forecast in the Reuters poll. Core machinery orders are a highly volatile data series, regarded as a leading indicator of capital spending in Japan. Lim Wei-jia, Reuters. Nvidia's shares have been on a tear this year, up more than 80% in 2024, but one of its top shareholders has revealed why they've been selling the stock. Raj Shant, managing director at the investment firm Jennison Associates, told CNBC Pro that the firm has been selling its position in the AI chipmaker to manage risk despite remaining optimistic about its long-term prospects. CNBC Pro subscribers can read more about Jennison's reasons. U.S.